Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 2nd of July 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves we need to be aware of. As it's a Monday, we'll look at things from a weekly perspective, and today I just want to flag three of the biggest movers, I should say, that we saw last week, and just have a brief look at those. So first of all, the New Zealand dollar, the Kiwi against the US dollar, down by around 1.87% over the prior week, and really easing on a combination of weaker economic data and a more dovish outlook from the Reserve Bank of New Zealand over interest rates and economic prospects. Meanwhile, in China, the US dollar made gains against the yuan, gaining by around 1.7% over the prior 7 days. But this was more of a manufactured easing on the part of the People's Bank of China. They reduced the amount of money that banks and financial institutions need to keep in reserve, adding liquidity to the system. Of course, one thing to keep an eye on here is if this easing continues, and let's be clear that the yuan's down 3.88% over the month against the dollar, will the US Treasury start to talk about currency manipulation and the use of currencies in the trade war? The Brazilian real against the US dollar fared quite poorly, I think it's fair to say, down by around 2.42% over the prior week. Emblematic this of the problems confronting emerging markets, rising, I should say, US interest rates, deteriorating picture in global growth, and the ever-present concern of an escalating trade war. Dollar index for its part trading around 94.77, up 0.53% over the prior week. A gain for the dollar index, but of course it was trading well above 95 at some points last week, so in fact it's well off the top. And on that basis, I think it's fair to say that the dollar is looking softer this week than it did when we started the prior one. Right then, what's on the calendar? Events that may move the markets today. There is no high impact data per se today, although we have got quite a bit of what we might term medium impact data to get our teeth into. We've already had manufacturing PMI data for June out of Japan and China. We'll have similar data at 7:15 out of Spain, accompanied by Swiss retail sales. And then if we move forward to 7:55 GMT this morning, we'll have the market manufacturing PMI data for June out of Germany, and that will be followed at 5 minutes later by the same data out of the wider Eurozone. At 8:30 we'll have the UK version of the June PMI manufacturing data, and at 9 o'clock back to the Eurozone for unemployment for May, alongside producer price index data from the trading bloc as well. We'll jump forward to 13:45 and we cross over the Atlantic for US market manufacturing PMI data for June, alongside the ISM manufacturing data at 1400. And that's it pretty much for US data. Fast forward then to 2200 tonight, and we'll see important business confidence data out of New Zealand for the second quarter. So we'll have an eye on how New Zealand businesses think the future looks there. Okay then, breaking news and comment that's caught my eye overnight. First of all, the influential Bank of Japan Tankan survey shows that business sentiment is fading in Japan, even as manufacturing PMI data for June showed a modest expansion in that part of the economy. Andrés Manuel López Obrador, or Amlo, looks to have won Mexico's presidential election, exit polls suggest, and the peso is strengthening on that basis. And meanwhile, Australian job vacancies have fallen by 1.7% in June. The figure for the prior month was also revised lower, suggesting that the jobs market is slowing in the country. Right, food for thought, something to take away with you into the trading day and beyond. Or why not have a think about this? This is a chart showing the relative performance of a variety of asset classes over the month of June. I'll just flag a couple of points. First of all, the solid gains in both the VIX and US crude oil, suggesting to me that the market is risk off at the moment, with political risk and geopolitical risk, I suppose I should say, on the ascent. And that's perhaps a picture that's backed up by weakness in markets like gold, copper and platinum over here, as well as a number of leading equity indices posting negative gains for the month of June. Right then, Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. Thank you for your time.